Here's 5 of the best mortgage application tips that you don't know about. 1. The mortgage term. If you're applying for a mortgage and the mortgage lender reduces the amount you can borrow, consider increasing the mortgage term, if you can, as this will mean the monthly mortgage payments become more affordable as you are paying back the money over a longer period, and therefore very often the mortgage lender will lend you more money. Most mortgage lenders will go to 35, maybe 40 years as a mortgage term. So as long as your current mortgage term is at least 5 years, below that, there should be some capacity to increase the term and increase your borrowing. But you do have to request this from the mortgage lender because they will come back to you and say the mortgage is declined, we can't lend you the money. As a mortgage broker, I would naturally look at these different elements to try and bridge the gap. Many people going direct to the lender will just give up at this point. 2. Lending into retirement. If you are employed and you contribute to pension payments, which is reflected on your payslip, then many mortgage lenders will allow you to take a mortgage out until age 75. Hang around to the end of the video and I'll give you 3 mortgage lenders that operate this way. It could be the difference between an affordable and an unaffordable mortgage and the difference between getting you those keys to your first home. If, for example, maybe you've left it a bit late to get onto the property ladder. 3. The best mortgage rate. So the lowest mortgage rate on the market doesn't necessarily mean it's the best mortgage lender for you to apply with. Comparison sites will literally just give you the best deal at the top of the list in regards to the rate, but it could be a lender that won't lend on the property you're buying. Maybe they only lend 3.5 to 4 times your income, maybe they won't take your overtime. Mortgage criteria changes so much. Don't go direct to your bank, use a mortgage broker on today's market and that will give you the best chance of mortgage application success. And any fees you pay, you'll get back in service and you'll get the correct lender for you first time, therefore saving money in case you choose the wrong mortgage lender first time, which can be an expensive mistake. 4. Down valuations. If the property you're buying is down valued, don't panic. If you really want the property and you're happy to pay a bit more in order to secure it, then just choose a different mortgage product with a higher loan to value. For example, if you're looking to buy a property for £100,000 and you're going to put a 10% deposit down, but the property value is at £95,000, but you're happy to pay the extra £5,000 in order to secure the property, then just choose a 95% product instead of a 90% product, which will provide you the extra borrowing. Just be aware that the rate will likely be a little bit higher, but as long as it's still affordable, it's a way of getting around a down valuation. But before you do that, and on the assumption you've got the ability to apply with another mortgage lender, there's another lender that fits your circumstances, then apply with another lender first. Take advantage of a free basic valuation, as it might be the valuer was just having a bad day and getting the valuation wrong. However, if it downvalues for a second time in a row, you know it's probably the correct valuation, and then you can make a decision whether to pull out or to pay that extra and use a product with a higher loan to value. 5. Credit commitments. It's so important that you know the exact balances and monthly payments of any loans, credit cards, hire purchases, PCPs, things like that. Because if you do not reflect these accurately, these balance onto the agreement in principle application, then you could receive a declined decision. Make sure to check your balances on all of the credit agencies, Experian, Equifax and TransUnion, and don't use any credit at all during a mortgage application. The best way to see your balances is to download a Check My File credit file who have all these 3 credit agencies on one file, because the balances between the different credit agencies could be different. It's free to download for the first 30 days and £14.99 thereafter. The mortgage lenders may use one of either of these 3 agencies, so it's so important to see what's going on each one. The link is in the corner of the screen or in the description below. Bonus tip: the 3 mortgage lenders that will consider lending until the age 75 if you have pension payments on your payslip, which are contributions you make, not just your employer. My go-to mortgage lenders are Nationwide, Santander and NatWest. Disclaimer: this doesn't guarantee they're going to lend you until that age. I've not had any issues myself, but just beware that these things are never a guarantee. but if you do it correctly, you'll certainly be considered. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. If you'd like to book a free chat with me to discuss your mortgage requirements and you'd rather your mortgage application be handled by a professional, just book a free, no obligation chat with me using the link in the corner of the screen, in the description below, or by clicking the Mortgage Chain logo at the end of the video. Let's make your dreams come true today.